Hi everybody, it's Terry Ryder from hotspotting.com.au, and this evening I'm continuing my series of focusing on good news events out there in the economy and in our real estate markets as a counter to the relentless negativity in mainstream media. Perhaps the biggest story of the day is that the JobKeeper package, which is worth a mind-boggling $130 billion, has been passed today by Federal Parliament. The wage subsidy package passed through the House of Representatives, and that has been seen as a crucial measure in keeping more businesses afloat and keeping more people in work. As a result of that package, one major bank forecaster has revised his predictions for the peak of unemployment down from 17% originally to around 9%. Still much higher than now, but if we can get through this crisis with unemployment below 10%, I think we will have done well. Now, in connection with that, Australia has been named as one of the top 3 nations in the world best placed to ride out the economic downturn. A report from PRD Nationwide examined all the G20 nations and their stimulus packages designed to bolster economies and jobs. Now, on a per capita ranking, Australia was rated second behind Germany, and when ranked in terms of the percentage of GDP, Australia rated third behind Germany and Japan. Now, although the Reserve Bank didn't reduce its official interest rate at its monthly meeting this week, and it can't go much lower than it is anyway, but mortgage rates do continue to fall. Comparison website Rate City says lenders are continuing to reduce interest rates for property purchases, and the country's largest lender, Commonwealth Bank, has dropped its lowest variable rate to 2.79%. Now, as someone who is old enough to remember paying interest rates as high as 17% in the late 1980s, this is extraordinary. We're probably never going to see another period in our lifetimes when mortgage rates are as low as this, and that represents an incredible opportunity right now for real estate buyers. Rate City Research Director Sally Tyndall says that the best way to get a rate discount if you're an existing borrower is to turn yourself into a new customer. In other words, banks extend their best deals to new customers only, not to their loyal existing customers, which I think is both disappointing and frankly disgusting. It means that you need to be willing to switch and refinance to get the best deals if you're an existing customer, or to be a new customer buying a property to get those interest rates below 3%. Other news from the world of finance includes further announcements by the major banks that they're relaxing fees and reducing some of their rules on credit cards, but they continue to maintain credit card interest rates at levels that are both ridiculous and unfair. Probably the best news around housing finance in the past few days is the announcement from the Australian Banking Association that borrowers who apply to defer their loan repayments during this difficult period will not be penalised on their credit files. Now, at Hotspotting, we've probably had more questions from people about this issue than any other in the past few weeks. People who have lost their jobs or who have otherwise had their incomes reduced are keen to take up the offer from the banks to have mortgage holidays to defer their payments for a period of maybe 6 months. But they worry that this will result in a black mark on their credit rating. The banks have reiterated in the last 24 hours that this will not be the case, and that has also been the subject of a recent announcement to that effect from APRA. Another big factor related to finance is the recent announcement that the first home loan deposit scheme has been extended. This scheme started on the 1st of January, and it allows a first home buyer to buy a property with a deposit of just 5% rather than 10 or 20% without having to pay mortgage insurance, because the federal government guarantees the other bit of the deposit. Under that scheme, buyers had 90 days to achieve a purchase, but they're now being given an extension by the federal government to give people more time to find and complete a purchase. And according to reports from the coalface of the industry, first home buyers continue to be active in the market. As we entered the virus crisis period, buying activity from first timers was at a 10-year high based on the lending data, and that hopefully will continue, particularly with that extra help from the federal government. One of the key factors that help keep real estate steady during this crazy period is the low levels of supply. Listings for properties for sale in the market are 14% lower than they were a year ago, and likely to get lower still as some vendors are withdrawing their properties from the market. In Sydney, listings of properties for sale are 23% lower than a year ago. In Melbourne, they're down 14%, and Hobart 19% lower, and Perth's down 16%. This was the situation before we entered the virus period, and having relatively few properties for sale in the market is a positive thing in terms of maintaining property values at or near their existing levels as we get through the tough period. The vacancies are also very low in most capital cities and many regional centres as well. They will rise because people who were using short-term rentals like Airbnb are now seeking long-term residential tenants, which is adding to the supply of rentals in the market. But most markets had vacancies so low that they can absorb new listings and still have vacancies at acceptable levels. I think time will tell. Another factor influencing the supply of properties in the market is building approvals. They've been quite low in recent times, particularly last year, but there was a 20% increase in dwelling approvals in February, which reflected positive sentiment in the market at the time, but that's unlikely to be repeated in the coming months. Now, there have been some positive things happening out there in property markets, and here's a snapshot of events just from the last day or so, which show that activity continues to happen and properties continue to sell. According to realestate.com.au, Canberra is one of the cities where real estate inquiries and sales have been maintained at normal or near normal levels in recent times. REA Group Chief Economist Nerida Conisbee says Canberra's market is travelling at its own pace, and she says we have seen an increase in buyer activity compared to the same time last year. It's up 16%, which is remarkable. She says we have even seen increases in searches for new development. Now, I would expect Canberra to be the least effective capital city because of its status as the national capital with a high component of public service jobs. There have been a series of high-end sales in Melbourne recently, particularly in the prestigious inner eastern suburbs. Some agencies that specialise in that part of the market are reporting very strong sales in recent weeks. And another example of good activity, according to realestate.com.au, an apartment development in Ringwood in Melbourne's eastern suburbs has made $17 million in off-the-plan sales in the past few weeks. And apparently because of these healthy pre-sales, construction is going to be fast-tracked. From Sydney, where there was a report yesterday of a home in Glebe selling in an online auction at a price $160,000 above the reserve price. In Brisbane, again, according to realestate.com.au, there's been an uplift in inquiries and sales of off-the-plan apartments. It says inquiries for apartments in new developments in Brisbane have increased 82% compared to the same time last year, which is, again, remarkable. It's believed that the factor driving this kind of activity is the reality that buyers only need to provide a small deposit at this stage, and that settlement may be 12 or 18 months down the track when we will be well beyond the virus crisis. One of the reported deals in Brisbane recently was a penthouse in a new development which sold for $7.5 million. Another thing that has emerged in recent days is reports of a surge of inquiries for Australian real estate from overseas investors, notably Chinese buyers, it seems. Some developers and agents have reported a doubling of inquiries from offshore for apartments in Sydney and Melbourne. Now, one of the most encouraging things amid all the negative news is that major new projects are making announcements that give rise to optimism about money being spent, economic activity happening, and new jobs being created. In South Australia, the state government has announced a $1 billion stimulus package, which includes $120 million worth of new infrastructure projects, which it says it's going to fast track. Most of these are road projects, and that continues a situation we've seen in recent years where the South Australian state government is spending a lot on road and rail projects around Adelaide. So that's destined to continue with this new package they've just announced. Also in Adelaide, infotech company Datacom has just announced that it's doubling its staff numbers at its hub in Adelaide. They're going to take on an extra 1,000 staff in the next 2 months. Technology companies, as we may know, are amongst those that are thriving and creating new jobs amid the current unusual circumstances. And Adelaide is the high-tech capital of Australia. It's our Silicon Valley. We also had the announcement that the team behind the Tesla Big Battery project in South Australia is going to do something similar but 4 times bigger in Geelong in Victoria. That project will have a 600 megawatt capacity and will cost around $300 million. Elsewhere in the Melbourne region, construction is about to start on the bridge work for a new freeway in the city's southeast, linking the suburb of Clayton to the suburb of Frankston, and that project is costing $375 million. In Queensland, a renewable energy company has announced it's going to build a $2 billion wind farm near Warwick, which is about 200 kilometres southwest of Brisbane. That project will generate enough clean energy to power 700,000 homes, so it's good news from an environmental viewpoint, as well as for the economy and for jobs. In Darwin, the Northern Territory government has announced this week that it's fast-tracking a program to build new classrooms at 15 schools across the territory. Now, as we will all be aware, supermarkets have been pretty busy lately, and they're amongst those businesses which are thriving in the current climate. And in Bendigo in Victoria, Coles has just announced 130 new positions are being made available. And that adds to recent news that the supermarket chains like Woolworths and Coles and Aldi have created many thousands of new positions across the nation to cope with the uplift in demand for food and groceries. Back to South Australia, and in the Barossa Valley, a new luxury hotel is going to be built at a cost of $50 million. The developers say they are supremely confident that robust levels of tourism will have returned by the time it opens about 2 years from now. Now keep in mind that everything I've just told you has happened or been announced in the past 24 hours or so. And if you didn't know any of it, or most of it, it's because mainstream media is obsessed with bringing us sensationally negative news and ignoring all those positives. But I plan to keep doing these broadcasts as often as I can, hopefully daily, in an effort to lift people's spirits by reminding us that amid the virus-induced craziness, there are many good and positive things happening. That's it from me for now. Let's talk again soon.